Hi, and let's take a look at the most challenging aspect of trading. The most difficult part of trading is excluding emotions from the process. You will never fully achieve this as long as we are human beings and not robots. However, it is possible to reduce our emotions to an acceptable level. Let's list some of the most common trading emotions. Fear, greed, overconfidence, overtrading, and revenge trading. Fear is the most common emotion. It controls our mood, general well-being, and, as a consequence, our decisions. Fear that a trader is on the wrong side of the market. Fear that your position will never reach your set target. Fear of losing your capital. In order to fight those fears, you can set a stop-loss level to limit unfortunate developments. Another important rule is to never hold over-leveraged positions. In other words, don't bet all of your capital on a single trade. As a rule of thumb, the maximum you should risk in a single trade is 2 to 5% of your total capital. This way, you can lose 10 or even 20 times in a row and still be financially sound. Greed occurs when you want more from a trade than its realistic potential allows. In this mode, you typically set unrealistic profit targets. Greed often stems from an urgent need to raise cash for living expenses or from a gambling impulse. To prevent yourself from setting unrealistic targets, check the daily average range of the trading instrument to get a general idea of where price might go. Key levels, such as major support and resistance zones, can serve as useful reference points. If your trading starts to resemble pure gambling, it may be better to visit an online casino. You will likely have better odds there, since casinos don't charge spreads or commissions. Overconfidence is a form of one-sided thinking. You become so certain about your position that you believe it will move in your favor forever. This is especially true when a position has been going your way for a prolonged period of time. Confidence is fine, but nothing in this world lasts indefinitely. Markets can reverse direction abruptly and without prior notice. Overtrading is another negative aspect of trading. Executing too many trades leads to both physical and mental exhaustion, and ultimately prevents you from staying sharp and focused. Revenge trading is the worst of all bad trading decisions. It is never easy to lose, even a small portion of your capital. When you lose a substantial amount, you may feel the urge to fight back immediately. At this point, emotions take over and a trader's nightmare begins. You start making all of the above-listed blunders, holding over-leveraged positions, over-trading, acting out of fear, or becoming excessively greedy. To prevent revenge trading, you must pause, step away, and plan your next steps carefully. To address the negative psychological impacts of trading, engage in physical activity, such as gym workouts, outdoor sports, walking, yoga, or meditation. These will help you reduce stress, restore your emotional balance, and boost endorphin levels, the hormones linked to feelings of happiness. Exercise also brings more oxygen-rich blood to your brain, giving a strong boost to your mental performance so you can make clearer, better decisions. To summarize, here are some practical suggestions to help you avoid emotional trading and protect both your psychological well-being and your personal life. Never risk your entire capital on a single trade. Limit your maximum loss to 2 to 5% of your capital in any given trade. Always set stop-loss and profit-taking levels before entering a position. Consider exiting a profitable position if you have held it for a prolonged period. Alternatively, set a trailing stop to protect your gains as the trade moves in your favor. Do not monitor your open positions 24 hours a day, 7 days a week. It is a self-destructive and exhausting habit. Never execute revenge trades. Simply take a break and plan your next steps. To manage your emotional state, incorporate physical exercise, good sleep, and meditation into your routine. Do not mix your trading activities with your personal life. Avoid discussing your trades with family or friends. Try not to hold open positions over the weekend, before days off, or ahead of vacation. so your free time remains undisturbed. Fortunately, automated trading systems can handle most of these challenges. They have no emotions and strictly follow your predefined settings. We will discuss this further in the next section.